Hello everyone and welcome to Into the Cypher State, the premier public broadcast of Galactica Network. Every week we attempt to discuss the hottest topics in our space with our incredible lineup of guests, and then we will open the floor to you, everyone listening. And hopefully you'll learn something today from our wonderful co-host Cosmos Os and our speakers Bonus Block and Decentranet. Hopefully we have something to offer you. Let's see if we can do a little roundtable of the speakers and get some info. First, we'll go with Haas, my co-host. If you can just introduce yourself, my friend.
Hey everyone, Haas here. Looking forward to today's conversations. I know each speaker, actually, not personally, but I've met them through, through the Matrix and had really good conversations, invited them to speak because I believe that what they're building and their beliefs kind of coincide with Galactica's views and privacy, compliance, and KYC, and just things that move this space forward. And lo and behold, I mean, I'm just a crypto maxi. I'm a privacy maxi, and I'm just excited to kind of just talk shop. I just got done working, so anytime that I get to just speak, and talk about crypto or listening to people, I just look forward to it. So.
Yeah, no doubt, man. That's what we're all here for. Just getting stuff done. Bonus Block, if you could just give yourself an introduction. If you'd prefer me to call you something else, I'm more than willing. Let me know.
Yeah, sure. You can call me Oscar. Bonus Block. Yeah. So what we are actually building is a native Web3 marketing protocol to support any networking chain by incentivizing the user activity. So any project can basically onboard users, and we are focusing on quality users. So basically, you as a project will be able to create a campaign that is specifically for on-chain activity. When we compare traditional marketing, you are paying 100% to, for instance, like Twitter or LinkedIn, and that 1%, 100% of the budget goes to the corporate. What we are offering is that 85% of the budget will be going to incentivization for the user. So basically into a reward pool. Because at the moment we are lacking attention to the user and basically paying, I would say, costs to social media and agencies where we have like complete worthless things going on. But I can speak about this all day. So
that's fair enough. So you're like the anti-bot.
Yeah, we do like to cut through some bots and basically hopefully killing some of the platforms that are overtaken by bots like Zeely or Galaxy.
Yeah, I completely understand, man. That's a good mission, to be honest. Okay, so we've heard from Oscar. How about Nikita? Nikita from Decentranet, please just give yourself an introduction.
Yeah, nice being here. I'm Nikita, CTO of the Center. We've been around for almost 3 years. We are kind of the browse to earn browser application that's actually available for desktop and for mobiles. We are based on the Cosmos. We are actively, enjoying our stay in Cosmos, and we're planning to do so for a long time. We have a very custom blockchain based on Cosmos. I mean, almost the latest SDK of Cosmos. We love the simplicity of it. At the same time, the modularity. There's so many modules in there, and the IBC, obviously, the inter-blockchain, protocol that actually, helps us a lot to partner with the other Cosmos-based projects. It's like one phrase, it's like browse to earn browser, but it's actually a quite large ecosystem. We have like a publishing platform inside. We have the staking right from inside the browser, our own wallet. There is a whole bunch of components inside of it. So yeah, that's in short, that's what it is.
That sounds amazing, man. We'd love to delve a bit deeper into your protocol at some point. Maybe we can get some questions in on this AMA, on this podcast, rather. That's our panel of speakers, guys. And we're really thankful that all of you listeners have already tuned in. If you could just do us a bit of a favor before we start, if you could just jump down into the comments, give us a like and a retweet. Those are the most valuable things right now in the Twitter algorithm. So we really appreciate those. But really, the comments are also what hit home for us because, you know, we can get some interaction with you guys, maybe get some questions from the audience. So we really appreciate those too. If you could just drop a like and a retweet, super helpful. Comments are even better. Just if you can do that for us, get the space out to more people, that'd be great. Okay, guys. So for today, I'm just looking kind of at the latest news out of the US. We've got Coinbase, and Coinbase is KYC. You could call them issues, I suppose. So in the state of California, the Coinbase's biometric authentication methods or their methodology, we can discuss that later. They have been ruled illegal. Well, not ruled, but there's a complaint against them that might be interpreted as illegal. So I suppose this goes on to biometrics, trust in providers, and privacy in general. We did a bit of privacy discussion last week, so we won't go too far into privacy, but it's still a topic of interest. So what do you guys think? Have you actually seen this news yet? Have any of you actually read it?
I mean, I've briefly seen it. That it looks like the individuals. It's not much, trying to seek $5,000 in damages per international. I guess I should have looked up what BIPA violation is, or one. It says or 1,000 per unintentional violation. It almost looks like, I mean, I can't say a cash grab because obviously that's not that much money. But, I mean, I don't know. It's just, California is a little bit of a odd state in America, and they do a lot of things different. Like the saying is like, if you go to California and visit like the rest of the states in America, it's almost like its own country in almost every facet of things, like the taxation, just the prices of things. I don't know. I don't want to go down that rabbit hole, but I don't really know what to think of it. You know, I don't want to be like a conspiratorial individual, but it's really kind of vague. I don't know, like what it says or may have. It doesn't say for sure that they violated any particular law. So I don't know. It's hard.
Sorry,
it's hard
I'm just
to say
helping you with like a conspiracy theory narrative here.
Yeah, because like who's like what individual, like it says it's the person's name, I guess, but like who just sues for that? Like, do they have proof? It says or basically they're saying if Coinbase's data was hacked. Well, it doesn't say that it was hacked. So like if what's or buts, right? Like I know myself not too long ago, it was probably like a month or two ago, maybe now. I got a letter in the mail. It was like, hey, you know, like since you were, I don't want to say the credit card company, but like you use this credit card company, and we outsourced our data for like, I don't know, like their archives or whatever, because I don't have the credit card anymore. That place was hacked and all our information was leaked, and there was like, I don't know, like 10 million people or so, and I happened to be one of them. So like that's hacked.
It's your
like,
basic centralization issue, really, isn't it? There, I mean, it's
totally. But I don't really know. Like, I mean, I could see if like Coinbase was being, I don't know how to say, like if they weren't being real secure. Like, I don't know their policies. Like, do they KYC you, then they get destroyed after they verify it? Like, what? I don't know how they do that. I wish this had more information.
It might have been a third party because a bunch of those like big exchanges, they use a lot of third party tools to kind of do the KYC for them. You know, not to store all that data and stuff like that. So it's not even it might be like a kind of clickbait because, you know, I know Binance for sure uses third-party provider for their KYC services, and it's like Namo or something like that called. So I think it's more of a clickbait, because then that person would need to sue actually, the third party KYC provider. And and my other point is that I think at this moment in time of how much digital we went as a species, I think pretty much everybody's data is already leaked at some point somewhere. Like it's not. I think it's already a non-existent issue. It just gives the hype, I guess, to both the Coinbase and the whole crypto thing. The negative hype, and the negative hype again. Like I'm seeing this always being that, like, we got the banks that are actively going against anything in crypto, and that's a huge amount of money, and that's why it might be a simple kind of like, let's throw since we are doing bad as banks, let's throw some news that crypto is even worse. They're gonna steal your whole identity, that sort of thing.
No, and I tend to agree with you on that. I mean, honestly, I know, I mean, experience with the government and whatnot, and California is very like radical in their views of pretty much every policy and everything like that. And you would be remiss to think that like these previous Web 2, even not even just banks, but just like Web 2 companies, they're funding different, politicians and things of that nature. And they must, I think some of them even view crypto as kind of a competitor to them as well. So, not only the banks, but these pre-existent monopolies that there are, like, what I'm talking about. Like, you guys are building out things to, I don't want to say compete, but just to make it more, it's better for the end user. And that doesn't really benefit these pre-existing monopolies that just get our data so easily and then just sell it off to everyone else and then prosper from our searches and things like that. And I think it is a little bit clickbaitish, because if it's like American politics, and I'm sure it's probably worldwide politics, whenever there's like a real issue going on that's actually like important to know or like understand, there's always some headline about something else, some celebrity or some way to divert the attention away from like what's actually going on. And I think that, like, you just nailed it right there. Like, the banks are going through all kind of stuff, and you got these politicians that are literally getting money from them. They can't help them campaign or whatever. Now it's like, oh, well, they're too big to fail. And like, Yellen and Biden just decide, well, this bank's too big to fail. Well, why? You know what I mean? Like, if I make bad investments, are you going to bail me out too? Like, no, you're just going to say, eat it. You know what I mean? And I think you're totally hit the nail right there on the head, so to speak.
Yeah, I mean, I would tend to agree with, we're dealing with something that's I don't know, like it's clearly an issue with Web 2 that if you've given your data to anyone, it's most likely been sold on. It's just the way it is. There's too much data is too valuable in Web 2 for it to not be sold on, really, I suppose, by unscrupulous people. Oscar, did you have a take on this one? I mean, obviously this leads into the whole the banking issues and instability in the US and all sorts of other topics that we're probably going to be rapidly moving on. What do you think, Oscar?
As from like product side of BonusBlock, we are not required to do any KYC. First of all, like that is actually the beauty of Web3 marketing in the future, is that you don't need to know a person's email address, location, or IP. You have a wallet address, and let's stick to it. So we don't endanger the user as we have done it in the traditional marketing side. But when it comes to, in general, with Coinbase, like my background was actually also in the banking sector, unfortunately, and it's from the Europe side. So when the KYC, KYB nightmare started, it was in 2014, 2015 in Europe. So basically a calamity started, like a major push from the government side, from financial institution regulatory bodies. They just pushed onto the banks, like, what the hell is going on? They threatened every single bank that they will get massive so-called penalties. Even a license could be revoked. Of course, every single bank did comply, and nobody did question the so-called necessity of huge KYC and KYB. And up till this moment, like, I would say not a single person have asked, like, what's the true reason behind it. I mean, my personal thoughts are that when it comes to the data itself, well, in general, everybody sees everything already. So what's the point of actually submitting and asking docs for? Like, that's the first thing. Is it because they want to bother like a regular person or a company, or they just want to have, I would say, possibilities to have these leaks, you know? So basically, they are not responsible as a system as a whole, that there's some possibilities to get this data from them. So I think that's one of the reasons why they're still asking this thing, is not to take blame when it comes to data leaks and data hacks. So
yeah, it's entirely possible. It really is. There's so much liability involved in this and so much money involved in these lawsuits that you just want to avoid everything at all costs.
yeah, and as a governmental body, like, your so-called neutrality is the best way to go. So you don't stop on,
unfortunately, and also
say,
ambiguity as well as neutrality. Like, if you're just ambiguous, then you can always like throw down a suit or like regulate something without having to have anything previous to mess it up.
Exactly.
Okay, so like as far as Coinbase goes, like it's always with this know your customer stuff with KYC. Like as a project ourselves, from Galactica's perspective, we tend to do KYC. We're intending to do KYC in a completely decentralized and private manner. So we've got something called the Guardian nodes, which are going to be handling this for us. So like each provider will be able to notarize documents and have those notarizations sent on chain via ZK proofs, just keeping the privacy of all the users on chain intact while providing the ability to have KYC on chain and provable. So I mean, I feel like this is just a Web 2 showing its face. It's just not an efficient way of doing things, and it was inevitably going to go this way. This kind of regulation by jurisdictions like California, it's just inevitable, really. I suppose there's always going to come up against some kind of regulatory friction. But this does actually lead us quite nicely into the banking issues, which was something else that came highly in the news this week. Obviously, we've got First Republic, which has gone under. I believe it's already been bailed out by the U.S. government. Hoss, can you correct me on that if I'm wrong?
Wait, can you repeat that? Sorry, I'm reading the actual information on United States District Court, Northern District of California, San Francisco / Oakland Division versus this Michael Massel. He's the one that opened up this lawsuit. I'm reading all this complaint. But go ahead. What was the question you asked me?
I was just asking you to clarify if First Republic has already been bailed out by the U.S. government, or if that's still in progress. I can't seem to. I'm not entirely sure.
I wish I knew that to answer. I don't think they've been fully bailed out. I know they were talking about it, but I can look that up actually while we're talking.
I mean, people still forget that 2008. Like, there was much larger kind of bailout stuff there. Like, it's not like, and right now the U.S. government has even more freaking money. I mean, printed and debted and that sort of stuff. So I don't think, like, I think it's, again, like, it's kind of like making another boogeyman. Like, oh, look, like, it's all gonna fall down. I think I'm agreeing with like Cosmos also on that. Is that let them fail. It's not gonna do like it's such a small percentage of the whole economy. I think like several like land mines might actually like be more expensive than single kind of bank bailout. So
Yeah,
Yeah, that was crazy in 08 whenever, because it's coincided with me trying to get basically a job, because I just graduated university basically. And same thing, like I forget the numbers, but it was so large. And if they would have just given like every American say $1 million, it would have saved money and probably would have did better than what this is. I'm just really tired and fed up with like these banks. They can just do whatever they want. They don't have to have any reserves. They just play with a different set of rules. And then like once they, when the going's good, it's good for them, right? Like whenever the economy's doing real well or investments are doing well, but when it's the other way around, it's just they crash. And then instead of them crashing and falling and the people get wrecked, just like us that bought Luna and UST got wrecked, and we just had to deal with the consequences. We didn't get a bailout. Like they just get bailed out, and then it's just like arbitrarily just printing more money, and all that does is dilute everyone's wealth, and it's not fair, especially for people that they have to work 9 to 5 jobs, and at the end of the month, they're just lucky to maybe have a little bit left over after they order some pizza and stuff like that. Now it's like they don't have any money if something happens, because gasoline goes up to, say like $4 a gallon, and a loaf of bread goes up $1, and this goes up, and everything just goes up. Like everything has some sort of consequence. Like you can't just print money, and there's got to be some sort of correlation. Like it's just pure economics. You can't inflate money and put a bunch of basically fake money into the economy and then expect nothing to like change. Everything's going to get worse like that. And it's just sad whenever billions and billions of dollars get just sent to bail out a bank, or bail out this person, or bail out that person. Like there's just needs to be a consequence. Like okay, this bank's terrible. It did bad investments. It was giving loans to everyone and anyone for millions and millions of dollars so they can buy a home. And in 08, it crashed. And instead of them just saying, well, you're beat, or just bail out all the people that had the loans. Like if I took out a loan and then I lost everything because of, some banker, like why should, they should have just bailed those people out, not the actual banks themselves. Like let the banks fail. That's how I look at it. And it's crazy because like what's going on right now is they're like Yellen's deciding to make it so regional banks, not all banks are bad. Like regional banks are good, and like they're better at least, and also like credit unions and things like that. They're making it so anyone that has any skin in the game, they have to deposit to these so-called FDIC insured ones that have up to whatever. And what that does is that just basically monopolizes banks. And whenever anything's monopolized, it's not a good thing. Like imagine if there's only like 2 major banks, like, and then talk about being centralized. Like they just control everything. They control the keys to the castle. Like you need competition and you need it to be diverse. And it's really not good. And
Horst, I mean, isn't that what happens if all the other banks fail? Pretty much. I mean, it just becomes centralized. So if you let every single bank fail, then that's what happens, is it not?
Well, no, not necessarily, because there's a lot of like regional banks. Like there's so many small mom and pop banks and so many small banks that like don't have, it's just like us, right? Like there's a lot of people in crypto that might only have say $1,000 in the market, and 10,000 or whatever they're okay with. And then there's Wells too. It's like, but imagine if the Wells, every time they made like an investment, like they bought Luna and USD and they lost like say $30 million, they just got it back. Like there's no consequence. Like they need to fail.
Yeah, I get you.
It'll even itself out.
Like, you're talking about accountability, consequence. I guess as some small part of regulation, and at various levels of interaction. Because you've got, for instance, this is why I like blockchain, obviously, because you are 100% and wholly accountable. You make a mistake, that's it. There's no reverting. There's no changing. It's just the pure accountability, consequence, and the result of action. So no, I do get what you're saying, and I do understand, like your will to let them burn. Essentially, it does make some sense. It does. What do you think, Oscar? Nikita, whoever wishes to go first?
I mean, what would be the specific question for that? Because I'm kind of got lost in a little bit.
That's okay. That's okay. No worries at all. Essentially, I guess you could bring this off as
It was the same to me.
That's the problem with when we do these open conversations, you end up sometimes accidentally going on a rant.
I always do. I apologize.
But I do. I mean, I do agree with the kind of the let them fail, but at the same time, I kind of um, the whole American regulation in terms of like the why in the first place the whole KYC business is that because who wants to do the business in US they have to be kind of regulated. So like for me, I kind of like have like this view of like anarchy in the economy in terms of like let them fail. That's one part, and then the other part, if bigger banks wants to just buy out smaller ones that go failing, let them do it. I mean, for example, like people were like, "Oh, look, like the next Bank of America is going to fail," and I'm like, "No, no, it's not," because you have like $200-300 billion in the startup bank, for example, but at the same time you have 1 trillion for Bank of America. Plus, a lot of people forgetting is that, for example, J.P. Morgan and Bank of America they do a ton of business overseas and in other countries. For example, like they have Bank of America has 1 trillion U.S. assets and about 3 trillion overseas assets, and like they definitely not going to bail out, like not going to fail on that because they have just way too diversification. That's one part, and another part is that uh, they have way too much money. Like for them to fail, that's just and plus it's different jurisdictions. The problem in America, because it's so stable, it's been so like kind of stable, is that the percentage for the deposits is just extremely low. That's when people start like yanking their money and stuff. In For example, in much more volatile economies, like in Eastern Europe, we have like ridiculous percentages. Like for loan is like like you take Russia, Belarus, or like like the Eastern Bloc countries, they have like 14, 15, 20% loans. And at the same time, they have the interest on the deposits of around like 15 to 17%. I mean, that's kind of going back to like the DeFi and crypto is that's kind of the solution because when you have a unified kind of rates across the globe instead of just in a single regulated, heavily regulated economy such as US, because I always thought of that, and I still think that it's the most regulated economy. Like even though they always call the USA the country of wild capitalism, it's not really true because there is way too much regulation on the money side. Like you cannot really spend tons of money and be anonymous at the same time in America, and that's kind of the whole KYC stuff comes in.
Yeah, I mean, to be honest, it's difficult to spend a lot of money and stay anonymous in any case. But you can, but yeah, I agree with the amount of regulation in the US. It is a more of an issue. One thing about like the larger banks not having any issues, maybe not exactly what you said. I'm just paraphrasing, but like there are some stats out. Like we've got basically US banks are reporting themselves that they have 620 billion in unrealized losses at the moment on securities, just in securities alone, and closer to 1.7 trillion when accounting for like loans and securities and everything else. So that's a significant amount, and there's and a lot of the money they hold in like commercial mortgages and stuff like that. That's all in small and regional banks, which is exactly the ones that are failing. So I'm not saying like it's going to fail. I'm just saying there is a percentage chance. I'm just saying that there is a risk. And it's just, and if a risk such as, you know, we know how bank runs work. If a risk like that becomes visible and public enough, then it becomes systemic. So you just got to take into account the percentage chance of that, which may well be low, but I'm just saying it's there.
Yeah, and I think there is another thing is that as you mentioned the host about the printing of the money, like it's kind of the same thing when you see some blockchain that just keeps on doing, you know, more printing more and more coins. It's obviously gets devalued extremely to the low point. But there is also kind of the separate side is that between all the monies in the world, let's think of money like the fiat money as kind of like the goods. It's like a product. It's the most demanded product because a whole bunch of countries are like trading between each other. So because it's most demanded product, even when they, you know, print more of that, it's still getting kind of eat up and used by people. So it's kind of in the same way that like even if they start printing more like Dogecoin or any other meme coin, if there is hype around it and if people are using it, you know, it's not going to matter too much. So
Pepe, man, it's a good one.
Yeah, totally. No, that's how. I like your point about crypto because, like, historically, if you look at any token, especially the ones that people are like, "Oh, that's just a farming token," you know, like whenever it gets going, there's so much inflation, but yet the price usually stays pretty well because there's so many people are using it, they're interacting with it, and then if there's any sort of market correction or some sort of exploit or something happens to that protocol, then stuff gets diluted, you know, and then your prices go down drastically, like they kind of crash. And a lot of, you know, I love Cosmos, but, you know, we're super early still. And a lot of the tokens, the prices did, because, I mean, the whole market did in general, but, you know, a lot did in Cosmos because typically inflation models are, you know, the first year or two, it's pretty, you know, highly inflationary. Then it starts to tail off over the years. But, you know, when the going's good, it's good. But then, like, if there's a correction, like we've been pretty much in a bear market since like May, you know, like that's when Cosmos kind of crashed down, is whenever shortly after the Luna and UST debacle. And then
I think, yeah, sorry for interruption, but I think that Luna did quite a lot of damage in general to the Cosmos.
oh yeah, Terra destroyed us. It's
Just destroyed it completely because imagine every single token on Cosmos was listed on the Osmosis, and Osmosis was supporting UST only. So every single token got so wrecked with the DPEG. It's insane.
we got even into the funniest predicament because right at that moment there was a whole bunch of, like, when we started, we had both the Ethereum token and the Cosmos token, and right at that moment when right before that giant Luna crash, we have been transferring a bunch of liquidity from the Ether side, which is the Uniswap, to the Osmosis, and we just got listed, and then that terror stuff happened. So like, and we got just bled out by the, you know, everybody's running.
Yeah, that was rough. It was rough for everyone.
I think that was like, generally a bad time for everyone. Yeah, jeez.
Yeah, and like my horror story is initially that's when Luna was doing real well. I was like, you know what, Evmos is going to come out. I feel like it's going to blast off. Like, I'm just going to swap to a bunch of Evmos, and then Evmos launched, and then like they had ledger errors and all kind of errors, so they halted their chain, so it didn't go on Osmosis. I was ready to go, and then it took a while. I want to say like a month or so. I don't even remember how long it took for them to launch again. But when they launched, it was just ERC20 basically. So like it wasn't on Osmosis yet. So I had to convert over to ETH, and then from ETH over to the Fusion to grab Evmos. But they only had like Nomad Bridge at the time, and it just like kept failing. So and at the time the market was doing so good, so it was like every ETH transaction was like $50, right? So I had like 2 or 3 unsuccessful bridge transfers. So I lost like $150 in gas, and I just raged. I was like, this is bullshit. And then I just went back to Luna and UST, threw it back on osmosis, and then literally like within that week is when the crash happened. And it was a lot. It was a lot of skin in the game, and it was just like really like I could have been saved really if Evmos would have just worked. And Evmos for so long, even when the market was like doing that, Evmos was blasting off. It was like the only thing that was actually performing, again, because it was new. It was so inflationary, and everyone was into it. Like everyone was buying it. They were staking it. They were compounding. They were doing whatever with it, and it would have been fine. But that happened. But that's the thing. What I like about this space, I know we're kind of going off on a tangent here, is like crypto can morph and evolve so quickly, and like everyone learned their lessons, whether it's the community members or just like say osmosis of the protocol. It's like, all right, well, we need to have multiple stable coins. We can't just be dependent on any single one. So like the less central points of failures for anything, whether it's your tech or just your tokenomic model or just your as a personal investment portfolio, is the better. Like just keep diversifying. And that's the whole thing. We were kind of knowing with the banks is like, I think having more banks is a good thing when it comes to banks, because if it is only a few of them, then they can control everything. And then, I don't like the fact that like a bank can control all these politicians and do this and that. And it's like, and some of them, they don't want crypto. I don't know if they all don't want it, but the only reason they're offering is because of the people, their customers want it. They want access to Bitcoin or whatever. But if it wasn't for that, they would be nonstop just attacking it, trying to just break it, essentially.
If they could take it down, they would. Obviously, we're a competing infrastructure. I mean, eventually we'll be a competing infrastructure anyway. So yeah, absolutely wonderful points, guys, and thank you, Hoss. Like, I just want to reset the space a little bit because we've gone through quite a lot already. So if I just want to thank everyone, all of our listeners for being here today. We're discussing bank failures, we're discussing trust in the system, we're discussing all sorts of really important topics. And we'd like to invite you guys to come up and have a word with us if you'd like. If you'd like to raise your hand, if you have a certain point to say, please. If you'd like to ask a question of any of our speakers, also please just put your hand up and we'll see if we can get you up. But for the time being, if you could just jump into the comment section of this space, if you could give us a like and a retweet, it would really help us get this information out to more people. We're trying to provide like some education stuff that's actually relevant to you guys. If you guys have any comments about the space, also you can just drop them in the comments below. It would really help us to improve as a space. So yeah, we'd really like to get your opinions. So we'll go back to the chat. Hoss, if you perhaps, you know what, actually I will see if I can get some speakers up if I can find them. But if you see any I miss, please, Hoss. Right. So we have, I guess all of this that we've spoken about so far can kind of be boiled down to this element of trust in the system, of institutions that exist right now that are not doing the best job. We've also talked about some parallels in the Web3 space where we're not doing so well. So I suppose one primary question could be, what about regulation? And we have regulation, you've said before, Hoss, we've had even over-regulation, especially in some US states and various other jurisdictions and regions. Eventually, I suppose we'll have to regulate ourselves. What do you think about like Web3 self-regulating through governance systems? Because I think personally, as like Galactica Network, we believe that eventually, there will be some semblance of self-governance in this. So, what do you think of that kind of I don't know, that kind of self-regulation?
I mean, the way I operate, I've always kind of been like this, even like before crypto was even a thing, is I'm more of just, I don't know if I want to say I'm a libertarian, but I take like a libertarian approach. And what I mean by that is, like, I feel like people should be free to pretty much do whatever they want to do as long as they're like not causing harm on another individual. And then when it comes to like governance, like, I do think it should be up to the people, and we should use these technologies because like the way of, I'll just use America, it's 2023, and anything voting wise is so antiquated. I honestly feel like, it feels like it's like 1970 sometimes whenever you go to vote, or you get things in the mail, you get these like garbage crap in the mail all the time, and these like ridiculous text messages trying to get you to vote for whomever. It just seems so old school. And like our governance isn't perfect in crypto. It's really relatively new, and it's going to improve over time. And I know there's like plenty of people working on things. Like for one, there's like DAO, which is like really great tooling for any DAO to essentially be created really effortlessly, and you don't even really need to know much at all about how to like build or code or anything. Actually, you don't really need to know anything. So they build all these tooling out to be more exclusive, because right now on chain for every protocol, every L1, it's real simplistic. It's like yes, no, or no with veto, and so you kind of get limited with like what you can actually propose. And if you do want to propose something complex, it needs to be in like multiple different steps, and then it gets real convoluted. And we all know like human nature is to not to really be attentive to detail, and it's just like they look at something that's real long and overblown, they're like, I'm not even voting on this, or I don't care, or I'm just voting yes or no. And but I think there's more accountability because you can actually see the statistics, and it's legit, and no human really can mess with it. It's like
you also see the
like
result.
the voting for
like on chain,
like,
you actually see the result of what you vote for, and like
yeah,
you see it in the code, you see it in the transactions, whatever you see it, and you see it there.
exactly. And like the last like presidential election, there was just so much gray area with everyone. It's like I even know when I went to vote, it was like you do it on a piece of paper, then you scan it in this like computer. And I know every like jurisdiction was like kind of different, but there's like a person like hovering over you, and these people like know if you're registered to vote like for a Democrat or vote for a Republican. And it's like why do these people get to know any of that stuff, right? It's like they should not know who you're voted for, like who you're voted with. And then people in America, like some people get like random like things in the mail that will like harass them because they're registered to vote one way or the other, and there won't be any return address and all this other stuff. Like there's just so much. Like we're talking about KYC, and it's like, how does this person know like, oh, this person's registered to vote this way or that way, and then they're going to harass you because you're voting to their opposite party. And there's so many things
it should be said also that obviously not everyone is in America, and some places it's 10 times worse. I mean, you'll have physical violence forcing you to vote one way or the other. So it's I think a better system, a better global system is needed for sure.
Yeah, exactly. We're dealing with things like that. I can only imagine in other, like you were saying, like complete violence and anarchy because you're voting against some sort of totalitarian or some like dictatorship or whatever is going on. So definitely agree with that.
Can I just ask, either Oscar or Nikita, do you guys have any kind of on-chain governance, or is that not involved in your protocols?
Well, we have about the governance. We are doing a bunch of things in terms of governance. We got up to I think 60 plus validators at this moment, and we got pretty active community. So like the latest proposition we got, maybe I don't know, 70% of all the token holders voted. I think some number like that. That's one part. And but yeah, we do implement the governance, but there is. I want to talk a little bit about some problems. There might be some problems with governance, but they're overcome, but not as fast as we desire. For example, the one of the proposition about we're going to be doing shortly it's going to be related to the minimum amount of withdrawal percentage and the kind of the cap on that. And for example, for that, it's implemented in the Cosmos SDK that's like 0.47 or 48 or something like that. And we own SDK 0.46. And at the same time, because we have custom blockchain, it's not easy for us to just jump to the next SDK because it's not straight out of the box. We have a whole bunch of modules. So for us to actually get through the governance, it takes some of the governments. Well, they're fairly easy and straightforward. But for example, sometimes it requires extensive development work before it even gets to the vote. So and it's not like it's not unusual for the other chains as well because some chains have some modules that can be only enabled automatically after a certain kind of manipulations or development work. So I think that's like the only kind of problems with the governance that we have, but that's more like technological. Morally wise, we are always for it. Like we always give all of our users, the token holders, a choice. Like it's even if we go through the whole to our main concept, which is browse to earn, you can just download our browser and never even get an account and just use it, and you're not going to even be anywhere in our system. You can just use the browser and kind of browse and not have any of your info sent to Google or anywhere else. So it's kind of like in our nature from the beginning as we started developing is that we always give a choice and we always for choice. So like if people, if people want to choose certain ways, it's their right. I mean, think about this. Like even though you do have most of the times in American history you have a choice, like they said in South Park, between kind of like a douche and a turd sandwich. You still have that choice, and people can still
Dude, I
kind of
remember
make
that episode.
and that's kind of what we advocating for as well. So like, I think every blockchain and every network should have governance actively pushed by their own community, and at the same time allowing the actual physical instruments to do that properly.
Yeah, you're so right though. It's a really difficult thing to actually implement and be like efficient with it. Like you can kind of we've in our designs for governance as for Galactica Network, I don't know, you can kind of gain an appreciation for even like even legacy governance systems in how like bloated and how slow governance can be. Obviously, blockchain governance in most forms is so much more efficient than that in any case. But obviously, it needs to get a lot better for it to be usable by just the average user and actually get stuff done. What about you, Oscar? I see you've dropped your mic.
Yeah, from my end, I mean, we're still on the test net, but when it comes to governance, like we're definitely gonna go with a very, very incentivized governance model. So basically, if you're staking, if you're providing so-called uh, uh, voting from your wallet, you will be rewarded for that extra. So because the bonus book works as an incentive for on-chain activity, and governance staking is also one of the most crucial parts for ecosystems. And for the governance, we also gonna have a native module for every single network across Web3 to use this so-called incentivization for the governance. Because if you cannot motivate them by just choosing about the future of the chain, but if you provide some extra incentive, like we definitely can see then people voting more and more. So I think that's like the thing that you need to kind of like apply on a constant basis, that people are, I would say, how to say it, when you do repetitively, you go with that. Hey, it's like normal thing to do and to engage, because our voting is like each 4 years, and just people don't realize that this type of voting is like the same importance, even more, because like government's voting is like useless at the moment. Voting on a meme network chain would be more useful than voting on a governance. Sorry for my comparison.
No, it's cool, man. It's understandable. It really is. It is like a lot of governance systems are a joke. They really are. And they don't provide much value, and they don't provide any value. Like you say, they don't provide any value back to the user who's trying to actually use the damn thing. So it's a bit difficult for actually getting adoption of that system. So, for instance, again, I'll go back to what we do. So, for Galactica Network, we provide value in a multitude of ways. So, obviously, we're actually aiming for a meritocratic system, which is difficult in and of itself. But by providing reputation on chain and a complete Sybil resistance on chain, we can aim towards that kind of thing, because it's not very many layer 1 chains that actually have that. In fact, not many at all. I wouldn't want to say zero, but I would say close to zero that have complete Sybil resistance and reputation on chain. So we have that chance to actually have that feedback loop of incentivization back into people who actually use the system for governance. So, for instance, we're working on a decentralized funding system for getting developers on chain, for getting projects funded, that kind of thing. In which, if you basically, by voting, you are essentially, and by voting on quality projects that are actually going to provide value to the chain, you as a user will get a feedback loop of governance tokens into your wallet through UBI, through our universal basic income that's provided to all of our citizens. So you're right. That incentivization really needs to be there, because otherwise you'll get a situation like you do in most countries where 70% of people don't vote, and that's just not good enough. So yeah, well said. We've actually gained a few speakers up, and that's absolutely wonderful, guys. If you would like to actually give us a take, or if you'd like to just say something or request or have a question, just put your hand up while you're up here on the speakers panel, and we'll be happy to take it, just so we can keep track of things. It's going to be a lot easier.
Hi guys. Yeah, thanks for having me up here. My question is actually for D-Center. And that's, I've used the platform for a bit now, quite some time, and there's really no development. There's no engagement from the community. There's been no advancement or progression. And I understand that obviously given the environment as of late, kind of it becomes a hindrance on any kind of innovation and everything else. But where's the direction of D-Center going? Thank you.
I'm just going to...
Yeah, no problem. I can answer that. Well, first of all, I would say that there is development, because the versions are getting out, fairly quickly. We are on the previous, Chromium version, which is just got released maybe a month and a half ago. Plus, there is a lot of background development that still needs to be done. The network getting quite complex. There is a lot of DevOps work in there, specifically because we are accumulating huge amount of data, because everybody's who's using the browse to earn option is basically the accumulation of users' data, and that takes a lot of the background work, specifically in the DevOps region, in the backend servers, and the optimization of the network itself. Because even the snapshot right now is several tens of gigs, which is huge amount to be had on just a simple network. So there is a lot of background stuff going on. Plus, technically wise, we are reaching as as we said, in our kind of timelines, we aiming for a lot of the stuff to be done in Q3, especially on the mobile part, because we've been doing a lot of the, to be fair, like we've been doing a lot of the development work for the desktop one, but we have been kind of on pause in terms of the mobile version. So in Q3, there's going to be a lot of the mobile stuff done in there. Plus, we think that within a week or two, we're going to have another version coming out of the desktop with the several stuff kind of integrated. One part is we announced the Demex integration. Another part is that there will be a world integration. I cannot say, I cannot kind of announce it here, but it's going to be announced fairly shortly. So that's the tech integration sides. Plus the loans, the technical side behind the D loans, as we call it, the B2B lending based on like the social, the social score in terms of PDV. That stuff is going to be released as well, but it needs to be kind of synchronized together with a lot of stuff that my partner Rich is doing, which is on the whole giving block stuff on the NFTs that have been recently announced. So there is a lot of work being done in that direction, and we cannot really do one release without another. So once we can fully release the details of the whole NFT business, it's related to the loans, it's related to the actual, several charities, kind of like big names again. And once that's kind of finalized, then we can do the technical part behind that. So there is a whole bunch of development going in, and it's not again, if you look for the past maybe year, a little bit more, even since like the Terra collapse and the whole FTX collapse, yeah, our prices have been suffering. But we have been doing a lot of the releases. So like if you go, I think the best is kind of just.
I'm really sorry, guys. I'm just going to mute everyone just for a moment. I do apologize for interrupting you, Descendra. But sorry, Nikia. But Trillion, I really appreciate the question. So I was half of mine to actually to take you down for that question, because obviously it's you're using a space that isn't for this. Didn't read the room, and that's okay. Descendra has given you, so Nikki has given you a very complete answer. So thank you for your question. Do you have any other questions regarding the topics of this space?
Sorry, I had just seen Decenter speaking. But no, my question was answered greatly. Thank you very much. I appreciate that. And yeah, I will continue to use the platform. I love I use it every day. It's my only browser on my phone as well. So thanks for all the work. And maybe make a read aloud button so I can have my articles read to me, like on Microsoft Edge.
No, I really appreciate your support, and yeah, and I understand a lot of people's kind of stuff on the mobile, because everybody's on the phones nowadays. So
I'm on the desktop, but I've been a supporter since the beginning, man. So I appreciate it a lot.
We are planning in Q3. We're planning major updates for the mobile. So to answer your question shortly, so.
Well, that was much more wholesome than I expected. So thank you very much, Trillion. That was wonderful. Okay, we have another speaker up, Mike F. Would you like to have a take? Or do you have a take on anything that's already been said?
Hey, greetings, everyone. Yeah, I just wanted to say hi and come up and kind of touch base on the whole situation we have with the bank failures right now. Here in the USA specifically, I'm noticing it's having a pretty negative impact on the state of crypto in general, in part due to the fact that we are very quickly running out of on-ramps and off-ramps in and out of the networks in general. And this attack on Coinbase is something that everybody really needs to pay a lot of attention to, because, like it or not, Coinbase is the #1 gateway to the entire crypto space for the United States of America. And if they shut down if they find a way to shut down Coinbase, our options here stateside are going to be very limited. And I'm not going to say that the entire crypto space is dependent on the U.S. and U.S. investors and users, but if you cut off the U.S. economy from the crypto space, the ramifications are going to be felt very, very widespread. And just to touch base again on like what you guys were talking about with the Terra implosion is, first and foremost, I'm an IBC maxi. I always have been, ever since I got into crypto, which was right around the time that Cosmos launched. Aside from Bitcoin, I really haven't dealt too much with crypto outside of IBC and Bitcoin. And the idea of interoperability between networks is game changing for the crypto space, and Cosmos is definitely spearheading that. But the downside to that is that all this liquidity across all these networks are no longer isolated to themselves. They are interconnected. And so when you have a situation like what happened with Terra Luna and the implosion of Terra and their stablecoin, and the fact that Osmosis was, sort of the liquidity hub for the entire Cosmos ecosystem. And I forget what the exact numbers were. I was looking at it back when the implosion occurred, but the Terra pools on Osmosis Zone, that was the largest pocket of liquidity within Osmosis by far. And when Terra imploded and the stablecoin imploded, we got hit. Osmosis got hit with this kind of double whammy. First, we had the implosion of the Terra Osmo pools, which led to just radical and permanent loss for Osmosis, which then trickled out throughout every other pool on Osmosis Zone. I know as the Cosmos liquidity provider at the time, I had probably 10 to 15 positions open in random pools throughout the ecosystem when that occurred. And all I know is I woke up the next morning and, I was literally down 75 to 80% across the board on all the pools, and my mind was just blown. So that shared liquidity issue that we face in IBC, it's kind of this deal to where, we either all rise together or we all fall together. And in the case of Terra being the largest network connected to IBC and having the largest stablecoin supply within the ecosystem, that implosion was felt instantaneously throughout all the networks. And then the following days, right after the implosion, we had to deal with Terra investors fleeing the Terra ecosystem and using Osmosis as exit liquidity, which added more impermanent loss to the pools and further castrated all the other IBC networks in the process. And it was just this ripple effect that in some cases resulted in over a 90% implosion to the value of the IBC assets that were bonded to either Osmosis or to Terra or to, pretty much any pool within Osmosis. So unfortunately, that money's gone. It went poof, puff the magic dragon, and an algorithmic implosion, and that money will never be seen again. And I know a lot of people they really like to target specific networks within IBC, especially the smaller ones who got hit the worst. And they just don't understand that it's not anything that the networks themselves did to cause this catastrophic collapse from within their charts. I tell people, if you really want to have an idea of what your token should actually be worth, just go to the charts and cut out the whole entire Terra implosion, remove it from the chart completely, move the current price action up to it, and that'll give you an idea of where the actual bear market bottom should be for the IBC assets. But because of the catastrophic collapse of Terra, we witnessed a liquidity evaporation that I've never seen in my life. I'm 40 years old. When Y2K happened, I was a young investor, and I was invested into a whole bunch of .com era stocks at the time, and I lost out on many of those, but nothing to the tune of what we have lost out within the Cosmos ecosystem because of the recklessness of Terra. So, I really like the way that in the IBC especially, we're starting to diversify what stable coins we use. We're starting to create new bridges to new networks. We got Gravity Bridge, we got Axelar. We have a whole wide swath of new assets coming in to take the place of the Terra liquidity. But it's going to take time for that liquidity to build back up again. And, the one thing I would say to everybody is just be patient. We look at these charts and we see the catastrophe that's occurred, but it's important to make note that it's not because of the networks themselves. They didn't do anything. They didn't rug anyone. They didn't, it's no validators. It's no developers that have rug pulled anyone. It's a catastrophic event that we've never seen in our lifetime that occurred. And the widespread implications of that is going to last for a while until we can get fresh liquidity in to take that place. And, we're likely to see rough times ahead still because of all these bank failures and new liquidity being cut off from entering into the ecosystem. And I know it's not just Cosmos that is feeling the ramifications of that. It's more widespread through the entire crypto space. When you can't readily go and purchase or sell your crypto assets, that creates a bottleneck, and that leads to a liquidity drain as everybody rushes out the door to try to get out before all hope of being able to ever exit a position is cut off from them. So the best thing, we can do here in the USA specifically is call our local congressmen and vote in accord with our crypto ideals. Find candidates that support where we stand, vote for them, get them into power, get some fair regulation into place to help prevent things like what happened with Terra from not occurring again, and move forward. But in the meantime, everybody just sit tight and keep accumulating and keep using these networks. Specifically in Cosmos, we got third generation tech here. IBC is revolutionary. It's going to go a long way, but we got to have patience now because we've been hurt pretty bad.
Thank you very much for your take, Mike. And yeah, honestly, I think it sounds more like a story of resilience than anything else. I mean, the fact that, Cosmos has gone through so much and it's still here, it's still operating and still doing great. It's, it's a story of resilience, as I say. That's one of the reasons why we at Galactica Network are intending to use Cosmos, the SDK, as a base and are doing so currently. And one of the reasons why, a lot of other people do it as well. So we have one more speaker up, I believe. Trev, you jumped up here. Really happy to hear your take if you have something.
I'm sure I have something to say. I was summoned, Cosmos Haas.
What, by a spell?
I did. I put a spell on him.
If Telegram is a spell, then I guess.
No, I just we were just talking about, and if you had any takes with like how kind of centralized, if you think about it, like Coinbase kind of is, like it's very necessary, but that's kind of like the only off and on ramp right now for the most part for Americans. And then also, like I know you weren't in here earlier, but we were just discussing, like the bank situation and how they get bailed out. And if you have any takes to that.
Yeah, I've just been kind of listening. I have a lot to say about, the things that were said. I hear the word Terra Luna and explosion. I'm going, oh, all right, here we go. Coming from that ecosystem, having built multiple projects over there, having, been really engaged on during that entire run, I think we're a little too optimistic. We need to dial the optimism back. We tried to jump to Web3 too fast. And realistically, we're on like Web, 2.2, 2.3, some shit like that, we're just not there yet. The infra isn't there yet. And raise your hand if you're a project and you're using AWS or any other solution that's centralized like that, and everybody's hands go up. So let's shut up about being decentralized maxis, and we're using these centralized services, right? So we're not there yet, realistically. So we need to build forward in a realistic and manageable manner, and not try to get too crazy, because this is what happens. No regulation, no oversight, and too much optimism, and too much unfettered liquidity coming in that's just trying to extract value rather than create value. And that's kind of how we got into this problem, in general. In terms of the banking situation, it's just we need oversight. I just got off a call actually, with somebody that was a key player in SVB, that left a long time ago, in the crypto arena, and is now trying to build things in for decentralized networks. Visa and MasterCard have been fighting over some deals in this space. One of them, Rain XYZ, is a solution. And then I think what was it called? Maybe Unbanked or something like that. Some of these solutions allow for the one-to-one collateralized USDC loaded into a Visa debit card, like a prepaid debit card, for corporate solutions. That's probably where we're at in the interim, because they want to make money and they don't want to lose out on the potential of crypto, which is massive, right? So we'll probably see a lot of that in the interim. The banks that did support crypto are no longer around. I'm curious, as I reached out to my people at Kraken, I haven't heard back, but I'm curious what's going on with it, because they have a bank out in West Virginia or some shit like that. Whether or not that's ever going to become a thing. And to address the question about the centralization of Coinbase, that is the solution. That's just what we have. There needs to be an interim solution for onboarding of, non-crypto native degenerate people, but it needs to be done in a way where education is at the forefront, so they understand what kind of risks they are taking. That's a whole new rabbit hole of, accredited investors, and should that even be a thing? And it's kind of controversial, right? They can risk it, but we can't. Kind of insane, but again, another time. So there's a lot of things going on in the space. I think we're going to have some wins, mainly because staking is not being a broker dealer, and it's stupid that that's a conversation. So Howie, and whatever nonsense that is. And I think things will turn around, but it'll be really, really rocky for a while. It'll probably be like a mudslinging fight of nonsense, and we know the truths, but nobody else does, because the public will get fed all the nonsense through media outlets. So it'll be interesting, but I'm cautiously optimistic that we'll be able to figure it out. Because if you're a builder in the space, that you're surrounded by the best and the brightest, and we're all trying to get from here to there. It's a matter of coming together and working together, and kind of pushing forward with the mentality of collaboration versus competition, because maxi culture is dumb, and ego prevents us from innovating. It stands in the way of innovation. So we need to shut up, stop the infighting, and figure out how to get from here to there, because we're all on the same team. And that's kind of my thing.
Man. Yeah. That's an incredible take, Trev. And yeah, I would personally completely agree. We are not. No one's fully decentralized yet. That's it's the goal. It's not the current situation. And yeah, we need to start actually dealing with practicalities of things rather than just wishful thinking and goals. So yeah, thank you so much for your take, man. It's always actually, I think you came up on one of the previous spaces, and I was very impressed with with the way you put yourself out there. It's very wonderful. Okay, guys. So it's actually been quite a long space already. So I'm just going to ask everyone if anyone has anything specific they want to say, just as a final thought, before we just say a bit of a goodbye from the speaker panel, and then we'll start wrapping this up. So if anyone else would like to reply to Trev's fantastic take, please do.
I wanted to say great thank you for having us, and again,
Yeah, actually, guys, I will need to disconnect, so it's pretty late for me. But thanks for having me. Definitely gonna support Galactica. Let's have a chat for collaboration. I would love to see Bronze Block with you guys. The same with the center. And definitely I would love to connect with Trev. So, Cosmo House, you need to do your job.
I guess I'm the matchmaker, you know what I mean?
Sorry,
Yeah.
this is Hoss suddenly the BD guy for everyone in the space.
I'm a Cosmos soldier. I just do whatever's best for the army.
Salute to you, man, my friend.
right there with you, Danny.
Yeah. All right. Take care, guys. Thank you so much.
Thank you, everybody. Have a good one.
Take care, everyone.
Okay, guys. Well, in that case, what we're going to say is goodbye and thank you very much for being in the audience, guys. It's been a great space. If you could, before you leave, just jump down to the comments below and give us a like and a retweet still. It just helps us get the name of the podcast out there a bit more. And very much thank you for being here. So obviously, if you want to jump onto Bonus Block or Cosmos Hoss's profile and take a look at what they've got going on, please do. By all means, please jump onto Galactica Network's profile and check out what we're doing. We're building something that hopefully will help a lot of people get onboarded into the Web3 space with privacy, compliance, and reputation on chain. It's going to be an impressive protocol. You should definitely check it out. So yeah, if like I say, if you could just jump into the comments below and give us a like and retweet, would really appreciate that. So thank you very much for coming, everyone. It's been wonderful having you. Check out the Galactica Network website and see if you can subscribe to the newsletter. That's also a great way to learn about us. And we'll see you on the next episode of Into the Cypher State.